Good evening and welcome to Crypto Based Media once again. We have for another live class here, or should I say webinar. So, good evening to us all. Welcome to the class. You're very much welcome. Like you all know, my name is Crypted Joe, and I stay in Kogi State. Yes, I'm a future trader and also a tutor, and which is one of the reasons why we are all here tonight to learn one or two. And so you can, when you join, you can just introduce yourself. If you're already live with us, you just introduce yourself, like your name and where you're watching us from quickly, so we can start properly and then get right into the class without wasting much time. So when you join, introduce yourself, tell us where you're watching us from, your name and where you're watching us from quickly, so we can get right into class. All right, so today we'll be talking about mastering futures trading on Bybit. How to the entry, exit, and the signal guide. That is to say how to enter trades, how to exit trades, like your entry and when you want to exit the trade, either as stop loss or take profit, and also how to place signals on basically Bybit exchange. Understand? So most of our teachings here will be on using Bybit exchange. We'll be basically using Bybit Exchange. So if you don't have an account, you sign up with the link in the groups. So you sign up, have an account with Bybit, and if you can deposit, fine. Um, there are some reward there, like there are some bonuses there when you register with someone's referral link. So if you don't have a Bybit account, you can just use the link in the group, sign up, have an account, and then so you can be catching up with whatever we are doing here. You understand? Because most of our teachings here will be using the Bybit exchange. You understand? So that's by the way. So today we are talking about mastering futures trading on Bybit, entry, exit, and signal guide. You understand? So how you enter trades, how you exit, and if you are being given a signal, how you can place it properly for um for good use. You understand? And also to how to build your confidence, like your confidence rather. So once you are doing something over time, you tend to like become confident and conversant with that thing. So without wasting much time, this is basically the Bybit view on a PC and on a laptop. So just there's little to no difference to that of a mobile phone. Understand? So this is how it is on a laptop. Same thing as it is on mobile phone. Um, Lest I forget, if you are not seeing it clearly, you just tap on the settings icon, then you see quality, then you select um, higher image or higher picture quality. I think it will be at 1080p. Then after some few seconds, it will become clearer. So for those of us that might have challenge of not seeing it clearly, that's the solution to that. Understand? So I believe I'm audible enough, and you can all see my screen, so we can continue. If you can see my screen and I'm audible enough, please indicate in the comment section so we can continue, so that I can know that we are together and I will not just be talking and I'm not being heard. You understand? So if you can hear me and you can see my screen properly and clearly, please let me know in the comment section real quick, fast, please, so we can continue. We're already 5 minutes into the class and we haven't started yet. All right. Thank you, Mr. Kalu. Okay, okay. So this is like I said, this is the view of the Bybit app on a laptop. Like I said, it has little to no difference to that of the view on mobile phone. So the Bybit app is one of the exchanges we have in the crypto world to trade. Basically, the main function of an exchange is for trading, either spot or futures. These are the two main type of trading done on an exchange: spot trading and futures trading. But today we are focusing on futures trading, the futures trading aspect, how to use the futures in Bybit, how to navigate around them and use them in your futures trading journey. So once you open your Bybit on the mobile phone, this view here that I'm bouncing this cursor on, it will be on the right, sorry, on the left hand side. Yes, it will be on the left hand side. So um when you open it, you see at the top there, you see either cross or isolated. Now this cross and isolated and portfolio, they all have their um meaning. So I will explain isolated and cross for the sake of this class. So isolated simply means entering a trade. It means to enter a trade with a particular amount and then risking part of it on a trade. So when it goes against you, you lose that particular amount you said to lose, and then if it hits your stop loss, they will now drop the remaining one. A Bybit will now automatically cut your loss at that particular amount you set and drop the remaining one to your balance. So, and again, if you use isolated margin and you didn't set stop loss, if the trade goes against you real bad, you lose. For example, let's say you enter a trade with $10 and you risk $1. Out of that $10, you risk $1. Now maybe you didn't set your stop loss. Let's say okay, you didn't even set, you didn't do your risk management properly. You enter the trade with that 10 USDT. Now if the trade should go against you, that $10 you enter the trade with, you will lose all of it. That means you are being liquidated now. You will lose that, the whole $10 will go. Now let's say on your balance you have $50 and you enter the trade with $10. Now isolated now simply means using part of your balance to enter a trade and risking some of it on that particular trade, because the amount you enter a trade with is different from the one you are risking out of it. You understand? So it all depends on the risk amount and the leverage you are using. That will determine the cost of the value that you are. That's why you have other value. I'll soon get to that shortly. So isolated is using part of your main balance to enter a trade and risking some of it on that trade. So for example, if you didn't set stop loss, you just lose that part of the amount they took from your balance to enter the trade. The whole of it is what you lose, not the whole of your balance. The one they took from your balance is the whole amount that you lose on that trade. Then that is that for isolated. Like the name implies, isolated, like separated from something. Then cross margin is when you use cross margin. Okay, for example, um, the cross margin type of margin is just like in forex. You know, in forex, if you are trading and you didn't set stop loss, and if it goes against you, uh, if it's going against you, your equity now will be reducing. Like the balance you have before, the balance you have before you enter the trade will be showing at that balance area. Then your equity is the one that will be showing the amount you are gaining or losing. So this cross margin is the forex kind type of trading in crypto. So if you are using cross and you didn't set stop loss, now if the amount you enter the trade with gets exhausted, like gets liquidated, it will start tapping from your main balance. You get, so it will start tapping from your main balance, and maybe from your main balance you still get liquidated, like all of it still got wasted, like or liquidated. Wherever you have USDT in your Bybit, it will start like extorting from that your balance, either in spot or derivative or wallet balance, wherever you have USDT. That's why it's called cross. It will crossing over from the main balance you are entering the trade with. So if you're just starting out as a beginner, it's best recommended that you use isolated. Get to know what's happening first. Like equip yourself with the environment of the futures trading first. Then you start with isolated, low leverage. Then before you can scale up to higher leverage or move to cross. But I still haven't found any reason to use cross yet. I'm still using isolated up till now. The only changes that I'll be making is my leverage because I have the proper risk management knowledge already. So that's it about isolated and cross. Now for the limit and the market type of entry trade. Limit is let's say you want to enter a trade now and you have a desired price range or level to enter the trade at. Limit simply means waiting setting a particular price for market to come to or go to before you enter the trade. Like if you are taking a short now, you will place your entry above current price. When market comes to that goes to that area, it should start dumping from there. So if you are taking a short, you set your entry above current price. That is limit order. Wait for it to come back or up to that place. Now, if you are buying, you place your entry below current price, current market price. Then, once the market comes back down to that area, you should start pumping based on your knowledge of risk management that you have done on your trading view or on the chart on your exchange. You understand? So that's for limit. Setting a price, waiting for market to come back or go to that price before dumping or pumping, or before you buy or sell or you long. And in crypto, you call buy long and you call sell short. So you set a price for market to come to before you long or you short. So that's for limit. Setting a price. Then market simply means entering the trade immediately, like using the particular current price it is. For example, now this is BTC USDT. So if I want to enter this trade now using market, once I set particular percentage of my portfolio or balance, let's say 5% or 10%, and I click on long or short, I will be positioned into the trade immediately. Like my trade will get triggered and I'll be on the queue of those that are already trading the coin already. But in limit, I'll be among those that have set a price like on the queue waiting for a buy or a sell. Like this other book now. These are the people that have lined up to sell, and these are the people that have lined up to buy once the price comes to that area and that particular price. So they are waiting for price to come to this particular area in price before they will buy or sell. So that's why it's called order book. So limit is setting a price for a market to come to or go to before buying or selling. The market is immediate effect. You enter the market. That's aggressive trading type of trading. So if you're just starting out, you make use of isolated, then low leverage and limit. So that's that. So all of these I've said I will explain them now using a um particular analysis I did on a particular pair here. So before we continue, I hope you are all following and catching up. If you are good to go, you can just indicate in the comment section before I move on to um the signal part, where I'll also be explaining as I will be explaining it, I'll also be touching other features in Bybit for clearer understanding. So are we good to go? If you are good to go, just type good to go in the comment section real quick so we can continue without wasting much time. If you are good to go, okay, good to go, good to go, good to go, good to go, sir. Okay, now Moving on, we'll be talking about the signal aspect now. Okay, now let's say, okay, okay, I'm going to write this as a signal, as in signal form now. I'm going to write it in signal form. Let's say, for example, someone gives you a signal, you want to enter a signal. Okay, edit exchange under USDT to entry. Okay, okay. Entry, entry is 0.5689. So it's 0.5689. Then, and for the stop loss, you have 0.5762. Stop loss 0.5762. So sorry guys, I just need to type this. I should have done this before the class. Then take profit 0.5464. I'm sure by now we are all conversant with the graphics on TradingView. When I mean graphics, I mean the charts and the figures. Basically, after, if you are the one that did the analysis by yourself, when you are done, you will get three digits on the right hand side. The one in black or ash is your entry, the one in red is your stop loss, and the one in green is your take profit. So our take profit is 0.5464. 0.5464. Take profit 0.5464. What else? Okay. So let's say, for example, you are being given this signal to use Bybit, and the name of the coin is ADA USDT, also known as Cardano. So you are being given the entry, the stop loss, and the take profit like this. I hope this is all. Entry, stop loss, take profit. Okay, yes, these are the major criteria, credentials to enter a trade. So if you are being given this, uh, should I call it right top now? Okay, signal. I want to know this. How would you work with something like this? If you have been given this as a signal, like before now, how will you enter or place this signal on your Bybit or let's say Bybit, because the instructions say Bybit exchange, because price price range different between it varies between exchanges. So if you have been given a particular signal on a particular exchange, please adhere to it. So if you have been given this type of signal now, how would you enter this on your Bybit exchange? I want to know in the comment section. Let's say this is signal now, and they give it to you in the daytime to enter and wait for price to, because this is a limit order. You wait for price to, okay, yes, I know I forgot something. Short. I've been given a limit price to enter the coin to sell from. So how will you place this on your Bybit? So I just quickly share us one or two. Let me know. If you have been given that as a signal, how, like, okay, let me even ask this question. How do you normally enter signal using your Bybit exchange? If you have been given a signal, how do you guys normally enter or place your signal on your Bybit app. I just quickly share one or two before we continue. I just want it to be an interactive session or class so that we all move along with subject matter at hand. Okay, Mr. Kalu, you're asking a question. You said, how do you get the percentage of your entry price in relation to the current market price? Okay, um, entering a signal, you are basically using the stop loss. You are working mostly with the stop loss digits. Yes, I'll still share with us um, a bit of risk management to use when placing signals. Understand? So I just want to know how you guys do enter signals on your Bybit before I move on to the aspect of placing that particular signal I just typed now and how to enter them properly to lose minimal and gain higher returns if it hits your take profit. So you can just in few words just explain or just type how you normally enter your signal, or if you have been given a signal, how do you normally place them on your Bybit. So okay, Mr. Isa said I copy and paste at the appropriate places. Okay, okay, that's a good one. I We can have more answers to that question, please. So while we wait for more answers, let me just move on to how we work with this, like a simpler way to enter this particular signal I'm looking right here. Now, for you to enter a signal on your Bybit using limit, now there normally comes two boxes. The first one is I think the first one is entry. Yes, the first one is entry. The second one is value, which is other value. It simply means um the the other value based on like the amount you are risking now, working with your stop loss percentage, it will give you the particular other value of that trade that you want to enter. Like for example now, if all trades that we do enter on Bybit, majorly on futures trading, apart from Bybit, all exchanges, they do give us like they do borrow us money. We do trade with borrowed money. Yes, based on that leverage. Because there are sometimes you are actually entering, for example, okay, let's say you are entering a trade with you're entering a trade with $10 and you're using 10x leverage. Your other value now will be 100. Now that 100 now is you are being borrowed some amount of money to open your position size for you so that you can actually open that particular trade for you to trade that particular coin. Understand? So out of that 100, you're entering the trade with $10. But based on that leverage, it will look like you are entering with $100. Why? Because your what they normally do is that they will multiply your cost with the leverage you are using. So the more leverage you the higher your leverage, the lesser money you are entering the trade with and the higher money you are borrowing to enter the trade with. You know, when you use high leverage, it simply means you are borrowing more of you are borrowing more money to open that position size or open that trade, thereby using less of your own. And the lesser leverage you are using means the lesser money you are borrowing, and it will require you to use higher amount of your own money to open up the trade for you successfully. So higher leverage, higher borrowed money, less of your own. That if you use higher leverage, the cost, your own cost, that cost now is the amount of money you are entering the trade with, it will be less. The higher the leverage, the lower the cost. The lower the leverage, the higher the cost. So you understand? So now these two boxes now, the first one is for you to enter your entry. That's the one on the signal. Then the second box now is order value. So how do you normally get your order value now? I want to know. This one now is a straight question. How do you normally get your order value that you do place on your second box, which is your value, order value, or order price? Is it that you drag this guy here to 5% or 10%, or there are some calculations you do? I want to know before I finally move on to explaining the last part before we call it a day. So how do you guys normally get um your order value on that second box after placing your entry on that first box? In that second box, how do you normally pass that level before setting your take profit and your stop losses? I just want to know before I share with you how you can possibly use um this one I'm about to show us here. I hope you're all together. Okay, God's power, I didn't get the question correctly, but I think you're asking about using big capital in trading if it will increase um your cost. Maybe that's what you want to ask. Okay. If you are using big capital to trade, you are not entering a trade with all of that money. You will still be using part of that. Let's say you have $500. You won't enter a trade without the whole of that $500. You still use part of it because now you are using limit order on isolated margin. So it will require you to enter with part of that money. So it depends on the leverage now and the amount you are risking on your risk percentage on that trade that will require you to enter at a particular with a particular amount on that particular trade. You understand? There are some trade that will require you to enter with 10, 15, or 20 out of that $500. It will require you to enter with 10 or 15 or 20 or $50 from that $500. So even if you have a higher capital, and based on your risk tolerance and your calculation and the leverage you want to use, it will require you to enter with part of the money. You understand? Okay, Mr. Kalu, I can see you doing some calculations. How can I get my value? It's assuming I use $20 and 10x leverage. I will calculate 20 um 20 times 10, which is 200. That is 200 will not be your order value. Okay, okay. Okay, let me just go straight to this method I'm about to teach us now. Now this method is um okay. Let me just dive into this one without wasting much time now. Now, this formula I'm about to teach us now is if you are being given a signal without a stop loss percentage. Now, there's a cheat code to it. If um if you are entering a trade, like you are being given a signal, yeah, like maybe you are a copy trader, you do copy trading, like they send you signal, you place on your exchange, and then with your little knowledge of risk management, you down place your signal, and then you make money. If you're that type of trader, you listen more about what I'm about to share now. If you have been given a signal without a stop loss percentage, you have to use a manual method to get your stop loss percentage. Now that stop loss percentage is very vital and it's very important to work with your risk tolerance to get your order value so you can know the actual leverage to use without you guessing around. You understand? If you are being given a signal without a stop loss percentage. Now this is a stop loss percentage I'm talking about. On your trading view, after you have done the analysis and you're done, this red part is your stop loss and this is your stop loss digit. You understand? So on your trading view, there is a bracket there, and inside that bracket, they normally comes with some digits. and after the digit you see percentage beside after the last digit. So on this particular exchange now, sorry, on this particular analysis now, this technical analysis that I've done on this ADA or other USDT now, I got 1.28 percentage, as you can see here, 1.28 percentage in bracket. Understand? If I should increase my leverage upwards, the percentage will increase. If I'm to reduce my stop loss, the percentage will reduce. So the higher the stop loss, the higher the percentage. The lower the stop loss, the lower the percentage. Now, this stop loss percentage is what you will divide your risk tolerance by to get your order value. Then you set your leverage that will give you um basically if you are taking a short, this is a sell short now. Like I want to short the coin from this particular key level to this particular area for take profit. So now if I'm to take a short at this particular level, then market should start dumping to this area. But if it's to start going against me, it will start pumping. Now instead of it to for me to lose all of my money, then I set a stop loss for Bybit to close my loss at a particular amount that I will set with my own hand. Then when market gets to this particular price range, 0.5762, it will cut, it will close my trade with that particular amount, and then I'll still have enough capital for another trade again. So if you're taking a sell short, make sure that whichever leverage you are using, your liquidation price, normally the one in yellow color, before you click on confirm button to place order, your liquidation price should always be higher than your um your stop loss. Understand? So this is it. This is my stop loss 0.5762. This is my liquidation 0.5803. Now the logic behind it is that after your entry on a sell short, now after your entry there are two orders above your entry. The first one should be your stop loss order, because your entry is an order, your take profit is an order, your liquidation is an order. So after your entry, the first order you should meet, if it start going against you, the first order you should meet is your stop loss order. If your liquidation order is the one that comes first, let me drag, let's just imagine that why is it not moving? Okay, let's say for example I use a particular leverage and then my liquidation price, why is it going up? My liquidation price is 0.5744 and my stop loss is 0.5762. It will just hit the liquidation price. I will lose the part of the money that was taken from my balance to open that trade. I will lose I will lose all of it, not my whole balance, no, the one that they took from the main balance to open the trade. Let's say for example I have $100 on my main balance, and Bybit took $20 to open the trade. Now inside the $20, I risk $5 that if the trade should go against me, they should drop the remaining 15 to my balance. Now, if I use a particular leverage and then from my entry start going against me and um, hit my liquidation order first before going to this stop loss, I'll lose all of that $20, not that $100. I'll lose all of that $20, and then the trade will just close. But if to use a proper risk management, I'll use a particular leverage that will make my stop loss lesser than the liquidation. Why? Because in a short trade, your stop loss should be lesser than your liquidation price. Why? Because the logic behind it states that if you start going against you, your stop loss order should be the first order. It should trigger first before your liquidation. By then you're already out with your little loss that you set. You understand? Then if you are taking a long, your stop loss should be higher than your, let me just invert this so that it will look like a long invert. So for example, you are taking a long now. This is your stop loss, this is your liquidation, then you are good to go. Whichever leverage you use that lets your stop loss higher than your liquidation, you are good to go. Why? Because after your entry, once the trade comes to your entry and start going up, you are fine. But if it start coming back down and then start going against, because you want to long and it start dumping, the first order after your entry, the first order should be your stop loss order before your liquidation. Now, if your liquidation is the first order you should meet before your stop loss, you will lose all of the money you enter the trade with instead of a particular amount you set to lose. You lose all of the money you enter the trade. So you set your leverage, use a particular leverage that will let your stop loss higher than your liquidation price. I will show you your stop loss and liquidation price in the confirmation window before you place your order so that you understand what I've been saying so far. So in a long trade, your stop loss should be higher than your liquidation, while in a short trade, your stop loss should be lesser or lower than your liquidation price. So that is it. So in this particular example, technical analysis I've done, I got 1.28 um as my stop loss percentage. So this stop loss percentage 1.28 is what I will divide my risk amount by. So let's say for example I want to like lose half a dollar on this particular trade, which is 0.5. So I will divide 0.5 by 1.28. So if I'm to divide 0.5, let me calculate it. 0.5 divide by 1.28, then you put your percentage symbol on your calculator. On your phone you just type 0.5 because on this particular trade now, I want to lose half a dollar, $0.5 on this trade. You can do it. You send my method, just divide the amount you want to lose on the trade by whatever risk stop loss percentage you get. So on this particular example, I got 1.28 percentage and I want to lose $0.5. So what I'll do is $0.5 divide by 1.28. Then I'll put my percentage symbol. Basically, all phone have percentage symbol. So when you are done typing your risk amount by your divide by your stop loss percentage, you put the stop loss symbol. So I got 39.0625. Now the one before the decimal point is what you're working with. Understand? So I got 39. Now that 39 is what I will place here. You can also calculate with me. 0.5 divided by 1.28. The 0.5 is the risk amount I want to lose on this particular trade, which is half a dollar. And the 1.28 is as a result of my stop loss percentage I got. So once you are done with your analysis, this example I'm giving is not a one-way something. It's just what I got on this particular analysis. It's not that when you are done with your analysis, you must get 1.28. No, whichever digit you get inside that bracket, that's your stop loss percentage. Simply go to your calculator, divide the amount you want to lose on that trade. If you're running $100 account, basically your 5% is $5. If you are running a $200 account, your 5% is $10. Or if you can't stomach $10, you can risk 2.5 or 2%, which is $5. So on this particular amount, I want to risk 5% of $3 account. That is zero sorry $10 account. So that is 0.5. So I'll divide 0.5 divided by 1.28 as my stop loss percentage. So I got 39.06. So the one before the decimal point is what you're working with. So now let me go over to Bybit to place the signal based on this example I just gave us now. So I'm heading to my Bybit now. Now I got 39. Mind you, I didn't state this when we started. When you want to place your signal, make sure that by default it normally opens with BTC on the screen. So you just click on that three dots on the left hand side, then you search the coin. This is ADA USDT. Now on your laptop, you see two sections, perpetual and spot. Make sure you choose the one in perpetual. Then on your mobile phone, make sure you see USDT perpetual below the coin, not spot. USDT perpetual. Then you click on it. So for this example, is ADA USD and under perpetual um section. So I'll click on it. So I'm not taking the signal by BTCs and Cardano or other. So I've set um the limit order already. So let me just, for the sake of this class, and explain it. Um, okay. Now, based on my stop loss percentage and my risk amount, I got 39 as my order value. So first of all, I'll place my entry here. My entry on the signal is um 0.5689. 0.5689. I hope you're all following. This is the entry on the signal. Now, this second box is the other value I got as a result of dividing my risk amount by my stop loss percentage from TradingView. Now, this example is for those that can do analysis by themselves. You understand? You can analyze by yourself on TradingView. This one is for you. When you're done with the analysis, just go over to um your trading view, that stop loss area, the one in bracket is your stop loss percentage, then divide the amount you want to lose on that particular trade with that stop loss percentage, then whatever answer you get before the decimal point on your calculator, that is what you type here. So on this example I got 39. Now you see, it looks like I'm entering the trade with 39 dollars, whereas I'm just entering with, I told you that cost is the actual amount you're entering the trade with, which is 1.34 USDT. So I'm entering the trade with 1.34 USDT, and it looks like I'm entering the trade with 39. Why? Because of this leverage. So if you multiply 1.34 by 30, I'm sure it will give you this 39. But on a more proper standard, this is the best way to go around it. When you're done with your analysis on TradingView, your stop loss percentage, just go over to your calculator, divide your risk amount by that stop loss percentage. So for this example, I got 1.28 percentage as my stop loss percentage, and I want to risk half a dollar, that is 0.5 on this trade. So I'll simply go to my calculator, 0.5 divided by 1.28 percentage, which is 39.0625, but you work with the one before the decimal point, which is 39. So that's what I typed here. Now the next thing is to click on the TPSL box, then two boxes will appear. The first one is take profit, second one is stop loss. Now you have to type in your stop loss first to know if truly that amount you said you want to lose will show below that box, then before you can continue to whatever you have to do. Now the stop loss is 0.5762. 0.5762 is what you type here. 0.5762. You see now, expected loss 0.5004, which is what I said I want to lose if it should go against me and hit my stop loss. So basically I will lose minus 38 percentage of this 1.34, which is minus 28 percentage of 1.34 is 0.5. So now I'll place in my take profit. So that take profit now will now be based on your risk reward ratio on your trading view. I know some of us are conversant with risk reward ratio, the amount you are risking over the amount you get. So take profit 0.5464, take profit 0.5464. So 0.5464. You see now you are risking 0.5 Now on this particular trade, my risk reward is 3. For those of us that can analyze by ourselves, you know what risk reward ratio is now. The amount you are willing to lose by the amount you make. So this is a 3 ratio 1. So I'm risking 0.5. That is 0.5 multiplied by 3. If you risk $1, you get $3. If you risk $10, you make $30. If you risk $5, you make 15. So I'm risking 0.5 to make 1.5. So this is it. Expected loss 0.5, expected profit, which is 0.5 multiplied by 3 based on my risk reward ratio. This is 1.5 that I'll lose. Now, this is the aspect that will get you to know the type of leverage you use. You understand? So after you are done with your entry, the order value, after dividing your risk amount by your stop loss percentage from trading view, activating your TPSL boss, your take profit well fixed in, your stop loss well fixed in, knowing the amount to lose and the amount to make. Then what you now ask yourself, are you longing or shorting? On this particular example, we are taking a short trade. Let me do something. Let me increase this leverage so I can understand something. Sell short. Now, before you take your order, you find out that there normally comes a confirmation window. Yes, a confirmation window normally comes up to show you, excuse me, to show you all your credentials, like all the info about this particular trade. Understand? The order price, there is the entry 0.5689. Your quantity, that's your quantity of the coin you're buying. So based on the amount you enter this trade with, you're actually buying 68 Cardano or Ada coin. So the other cost is 0.55 blah blah blah, other value 38. Now take note, based on this leverage that I'm using, 75x leverage, the estimated liquidation price is 0.5722. Now my stop loss is this one in red. Like I told you that in a short trade, your stop loss should be lesser than your liquidation. What I was trying to say that is that the one in red, your digit in red, which is your stop loss, and the one in yellow, which is your liquidation, the one in red should be lesser. Like the figures in red should be lesser than the figures in yellow. Now, if you notice, this one is higher than this one is supposed to be lesser than this one. So you go and reduce your leverage. You adjust your leverage and make sure that everything is in order. So these are before all the leverage used to come out and then you choose, but this update that Bybit has done, if you want to set a particular I was about explaining some basic information on that confirmation window before network tried to do something funny. So if you can hear me and see my screen audibly, please indicate in comment section so we can finish up with that last topic. Okay, I believe we can see my screen and I'm good to go. Can you hear me audibly? Can you see my screen? If you can see my screen and can hear me audibly, indicate in the comment section so we can continue with that last um, explanation before calling it a day here. Okay, okay, thank you for that response. So I was explaining something in that confirmation window. You just have to start all over again. ADAT, USDT. So um, my entry is 0.5689, 0.5689. Then my other value, like I told you, after doing that my calculation, I got 89. Then okay, TPSA, and my stop loss is 0.5762. 0.5762. Then take profit. Take profit 0.5464. 0.5464. Like I told you, it's a one ratio three. For those of us that can do analysis by ourselves on trading, it's a one ratio three or one. So I'm risking 0.5 to make 1.5. Now I'm taking a short, so I click on short. Now you take note of this confirmation window. In a short trade, your liquidation should be higher than stop loss, or your stop loss should be lesser than your liquidation. So to understand it clearly, if you are taking a short, your stop loss, that is this one in red, the one in green is your take profit, the one in red is your stop loss, the one in yellow is your liquidation. So the one in red is your stop loss, and it should be a lesser figure compared to your liquidation figure. So this is not lesser than this. So what you do, adjust your leverage. So basically you adjust it backwards. So I was explaining something like, if you want to add a leverage that is not among this one, you click on customize, then you type in whatever one you want to use. Let me reduce it to 50. Then click on sell shorts. Let me see if my liquidation is lesser than. Okay, it's still not lesser than my liquidation, so I'll still need to adjust my leverage. Let me say 30x leverage. Let me use 30. Click on confirm. Okay, it has been set to 30x leverage, so I'll click on short. Okay. Um, I still can't find. Okay, this is it. Cancel. All right, very good. So now, looking at this confirmation window now, I'm very much good to go. My stop loss is 0.5762. My liquidation is 0.5835, which means my stop loss is lesser than my liquidation. So I'm good to go to click on this confirm button and place my order. You understand? So on this particular trade, the highest leverage I can use is 30x. I can use um, leverage that is lesser than this 30, let's say 25, 20, 15, 10x, 5x, whatever, but I can't use above 30x leverage. You understand? So if you're just starting out, always stick to lesser leverage. Let's say you can start with 5, or if you want to use higher leverage, start with 10. start with 10, then later after gaining much knowledge, you can scale up to 12.5, 15, then 20x leverage as you gain mastery on how to play signal, risk management, and all that. So on this particular trade, I can click on confirm, and then I'll click on confirm and then place my order. Order has been set. So this is okay, timeout, confirm. So my order has been placed. So once price goes up to 0.5689, it's currently at 0.5636. So once the price goes to 0.5689, this will move from order section to position, and where I'll have my trade running, either heading to stop loss or heading to take profit. So now this particular example I want to give now is for those of us that will be given the signal just like this, and then without the stop loss percentage. For example, if I'm to send um, this signal to my students, I always put the stop loss percentage like this, so that you can divide whatever amount you are risking by that stop loss percentage. But let's say you have been given a signal and there is no stop loss percentage. Now this is the cheat code to how you do it. In a short trade, this is the formula. You do, in a short trade, your liquidation price, your stop loss price is the one that is higher than your entry. Okay, I need to open this up again. So basically, in a short trade, your stop loss, uh, minus entry. When you are doing your your mathematics, you subtract the lesser one from the bigger one. So since my stop loss is higher than my stop loss figure is higher than my entry figure, I will do stop loss minus entry. And so I'm taking my entry from the stop loss. So in a short trade, stop loss minus entry, then divide by stop loss minus entry. Now you are doing this calculation on your phone or laptop. So once you do stop loss minus entry, whatever answer you get, you press your equals to, then you divide by the entry again, you press your equals to. So stop loss minus entry divide by entry, you press your equal to, then you multiply by 100. Now this for a short trade. Now in a long trade, if you want to buy in a long trade, now if you are taking a long, your entry is the one higher than your stop loss. So in a long trade, you basically do um, entry minus stop loss, then you press the equal to, divide by entry, press your equal to, then you multiply by 100. So you can do this now. You can use this particular example now, this particular formula, and work with this example. You see that if you use this formula for this particular example, it will give you that 1.28. So you can just follow up. You can use your phone to follow up. So on my calculator on my mobile phone now, I want to do this. The formula on a short trade says stop loss minus entry. So my stop loss is the one higher than my entry. So stop loss is 0.57 62 0.5762 minus stop loss minus entry. So minus entry 0.5689 0.5689. I'll press the equal to, then divide by my entry 0.5689 0.5689. Then I'll press the equal to again, then I'll put my multiplication sign, then put 100. You can see I got 1.2831780 long numbers. So I'll pick now after your decimal point on this particular example. After the decimal point, you pick the first two digits. So if I'm to pick the first two digits, we get 1.28. You can see on that. Uh, you can see for yourself. This is 1.28 in bracket. So this is formula to get your stop loss percentage. Now, after getting that 1.28, now you already know that that is your stop loss percentage, and the main nature of stop loss percentages are to be used to divide to be divided by your risk amount, so that I can get the other value that you place on your Bybit. Where is it? That you place on your Bybit other value box, or the second box after your entry box, the second one. So that's the basic on the main nature of that stop loss percentage. You understand? I don't have a long trade, so I would have done this one for you. So it's just basically just the same process, just that in a short trade, the stop loss is higher than entry, so it's stop loss minus entry. In a long trade, entry is higher than stop loss, so it's entry minus stop loss. Whichever answer you get, press your equals to, divide it by your entry on that signal, press your equal to, then multiply by 100. It will give you a particular digit point, something, something like that. So you have to pick the first two digits after the decimal point. So on this particular example, I got 1.28317806292284 long like that. So 1.2831780662. So the two figures after the decimal point is 28. So that is 1.28 percentage. And if you check that trading view there, you can see that our stop loss percentage is 1.28. So if you have $100 account and you want to risk $2 or $5, just divide it by this, you get your other value placed on Bybit. So that's basically it. This one's already moving to our direction, but it has not tagged us in. So if you have any question to ask, um, okay, Mr. God's power, I'll do that. I'll do that. How to take maybe this is just the second. This is the second time we're taking how to use Bybit for futures trading. So possibly the part three, which might be the last section or the last um, class on how to use futures trading on Bybit, but I don't know yet. It's not a final say. So subsequent classes, I'll give examples of this same short trade and long trade also. So that's it. Okay, the benefit of using leverage, Mr. Richard, is actually borrowing money to enter a particular trade, because you can't use your own money to open your position size for you. You understand? That's the major reason why leverage is there to use in futures trading. Now, you are not basically doing the work. It's Bybit that will do it for you. So yours is to just to calculate your losses, know your figures to put to input in your Bybit, and then know the particular leverage to use. Then everything will be done for you. Yours is just to fix in your digit, set your particular leverage, and everything will be will be done for you. Like this particular trade now, for this particular trade now, based on my risk management, I got to know that the highest leverage I can use here, because me basically naturally I love using I love increasing my leverage to a particular point that um, if my stop loss uh, is getting too close to my liquidation, I will stop. Then I'll use that particular leverage. So in this particular example, 30x leverage is the highest I can use for this particular exchange, and that 30x leverage now is now showing as if I'm entering the trade with $39. So basically, it will require me to enter with $39 to open the trade for me before I can even place my order. I need to enter with $39, but on my balance, I don't have up to $39. You get? So I don't have up to 39. I only have is it $3 or $10 there. So um based on that leverage now, based on the help of that leverage, I'm borrowing more USDT to open that position size for me so I can be able to place my order and wait for price to trigger my trade. So it looks like I'm entering the trade with $39, whereas I'm just entering with 1.34. That is the cost I keep telling you guys about. Cost when you are placing your figures on when you place your entry and then you get your order value, you see that the cost will show you the particular actual amount you are entering the trade. So on this example, I'm entering with 1.34 exactly, but I'll be needing 39 USDT to open that trade for me based on this 30s leverage I'm using. You understand? So basically is my cost multiplied by leverage is what will give me my order value, but I won't be able to set a particular amount to lose, which is why that stop loss percentage will come into play now. So you after doing analysis, that your stop loss percentage on trading view, multiply your risk amount by it. And if you have been given a signal without the stop loss percentage, that is what I did here. You can take a screenshot or the recorded version, you can play it later and then pause it and take a screenshot. Understand? In a short trade, stop loss minus entry equals to divide by entry, press the equal to, then multiply by 100. Then in a long trade, entry minus stop loss, whatever answer you get, press the equal to, divide by entry, press the equal to, then multiply by 100. It will give you a long, very long digit. So you pick the first two digits after, for both examples, for both calculations, you pick the first two digits after the decimal point. So if it gives you 5.626578, so you just your stop loss percentage is 5.62. So if you want to lose $5, you divide 5 divided by 5.62, then you put percentage symbol beside it on your phone calculator or laptop calculator. Whichever answer it gives you before the decimal point is what you place here on your Bybit, the second box here. So then you set your leverage to make sure that your stop loss is far from your liquidation, either lesser than it if you're taking a short, or higher than it if you're taking a long. So that's basically it. Um, okay, I'll do that. I'll try and do that. I'll try and do that, Mr. Isa. So any any question? If you have question, you can ask. But I've stayed too long than the actual time we have to spend here. If you have questions, you can ask quickly. Just 2 minutes more, then we'll call it a day. We'll be rounding up by 9:15. This is 9:13. So by 9:15, we'll be closing, and then we'll call it a day. If you have questions you want to ask, for me to share one or two on before we close, you can ask, or you can drop them in the group, and they will still be answered. So if you just want to drop it here to be answered quickly, then you can drop them here. But still on still, if you drop them in the groups, they will still be answered. You get them answered. So for those of us that have more and more questions to ask, you can drop them in the groups. Drop them in the group, then you get them answered. all questions will be attended to and answered correctly. Okay, Mr. Sani, it depends. It depends on your risk management and the strategy you are using to trade. But basically, the recommended amount is if you can start with $10, is I see that one is smooth and is better. Especially if you're just starting out, you just deposit $10 and then try out the features environment and equip yourself, acquaint yourself with the knowledge of it, and explore more. And you practice, and then use the proper risk management and improve yourself. So if I'm to give advice on that, you can start with $10 and then use a low leverage. Always use limit to enter your trades and use isolated margin always and always if I just starting out. So yeah, so my own point of view, the minimum you should start with is $10. Yes, and always use 5% of your capital. So that's it. All right, it's time already. We have said, we have explained, we have showed, and what else we have discussed. So thank you very much for your time. Thank you for coming out. It has been a wonderful time. It won't be successful if I was the only one here. So me plus you guys made it a success. So thank you very much for your time. We do appreciate. So from me, from Crypto Based Media, and to my fellow future traders out there, we say thank you for coming out. Thank you for devoting your time to come and learn one or two. Also share your knowledge with us here. So appreciate. Thank you for your time, questions, contributions, whatsoever. So thank you very much for coming. So see you guys in the next webinar or live class we'll be holding here at Crypto Base Media. Don't forget to like, subscribe to the channel, and turn on the notification bell to be getting more educational content and educative motivational content about crypto trading or trading in general. So thank you very much. Um, I sign out. So have a wonderful night rest. Thank you very much once again for your time. So see you guys in the next class. Peace out. Stay safe, man.